RKB Accounting specializes in cross-border taxation. Your one-stop solution for filing taxes in the United States and Canada. RKB handles income tax, sales tax, payroll, and bookkeeping, and also helps in incorporating your business on both sides of the border. Please visit us at rkbaccounting.ca to learn more about our services.
So new T2, it is asking me start of the year 2022-01-01, 1st December 2021, create a return. As you saw in T1, there is a sheet called info sheet. The same info sheet is also applicable to the corporation. In the T1, you provided your personal information, SIN number, date of birth, and all those things. Now here it is asking for the corporation. What is the business number of the corporation? 1, 2, 3, 4, 5, 6, 7, 8, 9, RC 0001. Start of the year, end of the year, corporation type. This is important. If the corporation is owned by a resident in Canada, then it is called a Canadian controlled private corporation. And this is important because if you are a Canadian controlled private corporation, you get small business deduction. Small business deduction means up to your profit of $500,000, you get small business deduction, and roughly your tax rate will be 12% of the income. If you are not a Canadian controlled private corporation, then your tax rate will range somewhere from 30% to 40%. Still, if you are a Canadian controlled private corporation, there are certain income which does not get a small business deduction, like passive income. Passive income means that is not an active business. For example, if you are renting a property, that is called passive income. You bought shares and you got dividend, that is called passive income. Mostly in general, what you can consider that business where you are not actively involved. You are not providing any services or not selling a product. If you are not doing these two, selling product or services, then most likely your income will be considered passive income, and passive income will not qualify for a small business deduction. And again, your tax rate will go into 30% bracket. So assuming this is a Canadian controlled private corporation, corporation name, ABC Inc., date of incorporation 2021-001, date of amalgamation, no, language English, corporation correspondence language change, no. We are only going to focus on the yellow item because those are important. John Street, Concord, Province, Ontario, postal code L4K 1B1. Mailing address, use head office. Other address if you have any. Director, Raj. Position, director. Phone number 476925677. Email address info@rkbaccounting.ca. Contact person. Normally, if he is my client, then I will put use form. So in any case, if CRA has any question, they will contact me instead of contacting my client. As you saw that individual pay two types of income tax. One is federal income tax and another is provincial income tax. Same thing applies with the corporation. You pay federal income tax as well as your provincial income tax. So this company is business is operating in Ontario. So I select Ontario. So it will pay, if it reports any income, then it will pay federal corporate income tax and Ontario corporate income tax. Did the corporation own more than $100,000 property outside Canada? No. Was the corporation associated with any corporation in the previous tax year? No. This is basically you have the $500,000 income where you get the small business deduction. But if you have two corporations, then the another corporation become your associate corporation, and that $500,000 limit you are going to share with your associate corporation. So basically, the meaning of 500,000 small business deduction is applied to all the corporation in your name or in your family name. The reason being, so suppose if you are in business and in the business you have more than $500,000 profit, so you know that if my profit is more than $500,000, then I won't give the a small business deduction. So what you may think that, okay, let me incorporate another corporation, and I will put my some income in that corporation and some income in that corporation. So that way, a person can create 10, 20, 30, 40, 50 corporation, and they will try to find out that they will try to see if they can get 500,000 small business deduction for each corporation. So for example, Rogers income might be hundreds of $1 million, and they can create 200, 500 companies and distribute their income in all the companies, so they pay lower tax. So the government says no, the $500,000 deduction limit will apply to all your associated corporations. There is a definition of associated corporation, so those things are complicated. When it comes into use, you can read it on the CRA website. Is this first year of filing after incorporation? No. Signing date as of today. Business activity. Service. Okay, let's look at accounting firm. Office of Accountants. And tax comes 100%. The corporation is inactive. I said no, but still there is a yellow mark because we haven't put the financial information. So on T2, you only need to complete the info sheet, and you need to input your financial information on two forms. One form is S125, which is basically your income statement, and another is S100, which is your balance sheet. So let's go and do the S125. You can see here, or you can search S125. Income statement. So 75,045 was revenue. This is a service company, so there is no opening inventory and closing inventory. Operating expenses, you can find all types of operating expenses here. So office expenses, $550. Rent, $12,000. Salary and wages, $4,000. Meals and entertainment, $1,000. So this is the net income on which you are going to pay taxes. But as I told you, that only 50% of meals and entertainment is allowed. So what the system does, it takes the profit to S1, Schedule 1. So your book profit presented on the Schedule 125 is 37,495. Then what the system does, it will allow only 50% of meals and entertainment, unless you are long haul truck driver, or there are certain situations where meals and entertainment 100% allowed. So the profit for the tax calculation is $37,995, because $500 of meals and entertainment, which was disallowed, is added back to the profit. Now you can go to F4 T2 summary. So this is called T2 summary. When you go to your T2 summary, you can see your tax calculation. Your taxable income is 37,995. Part 1 tax is 14,438. Small business deduction, which we talked about. So that is reduced. Then they also give federal tax assessment. This is also a part of calculation from small business deduction. So the net part 1, that is federal tax payable, is $3,419. Ontario tax is payable $1,215. Total tax payable is $4,634. If you calculate 4,634 divided by 37,995, so roughly around 12.2% is your tax. Now complete the balance sheet, which is at $100, and accounts payable, accrued liability, $1,000. Common shares, $100. 37,995 and 95. Sorry, 37,595. And this is shareholder loan. You put shareholder. And it is done. And then we can, if you have any asset like laptop or office equipment or plant and machinery, you can put it on Schedule 8, and you can choose which asset it is. So for example, Schedule 8 is office furniture. Double click here, you can put here office furniture. This is a current year addition, so I have to put here current year addition. I bought it on 2022-04-01, and the cost was $5,000. And it will automatically calculate your depreciation. During the COVID, since the COVID, they have allowed accelerated depreciation to boost businesses. So the government is saying, if you have purchased certain asset, we will allow you to claim 100% depreciation. So in this case, it is calculating, although for this class, only 20% is allowed, but under the accelerated tax incentive, they are allowing 100%. Or CCA including immediate deduction. Or let's check on the S8. Cost of acquisition $5,000 and depreciation allowed is $5,000. If you want to claim a different amount, you can click here. Yes, I want to claim only $1,000. So you can claim a different amount. That's it. Any question?